Okay, good morning, everybody. It is Wednesday morning, a couple of days after Hurricane Sandy. My name is Pete Renzulli. Going to do my best to bring you the T3 Live morning call here from my apartment, actually working from home while everybody is doing their best to take care of their families and scramble around to get their life back to normal. First and foremost, we really appreciate everybody's patience with what we have going on here as far as T3 Live operations. If you don't know, our office was hit pretty bad. We're practically on the water downtown, and the office itself looks like it's going to be closed at least the rest of the week, and there is no power in the building yet. So, again, we really, really appreciate everybody's patience. So, I'll do my best here with what I have at home to put together some pretty good preparation for each morning, and then we'll take that right into the virtual trading floor when the market opens up at 9:30. So I guess you can see here we have the spiders. I'm going to run through the major indices as ETFs and some of the bigger stocks. We've got some stocks in the news, some stocks that have reported earnings here this morning, some that were delayed. So we'll start right out here with the spiders. I guess the biggest thing that we can recognize here is this 4-month run to the upside of higher highs, higher lows. Looks like it's being broken on the monthly chart here so far for October. We have made lower lows, haven't quite made we have made lower highs, but not quite lower lows yet, and we are actually opening up a little bit higher this morning, 142.12. So we're kind of trading right up in here, filling the gap. You can see here on the weekly, though, we have broken down a little bit. So we're kind of in a zone right now where it's not quite aggressive on the short side, and certainly not as aggressive on the long side, just based on the fact that you can see that we have started to roll over and closing below quite a few key moving averages right now. So if we draw a quick trend line here, this gap fill is what we've been watching for a while. Scott's been calling that out in the morning call for about 4 days now, and although we had 3 days in a row here in the SPY where we closed below the open and we stayed below the gap, you would assume that would have been further pushes to the downside, especially on a couple of those days we're on lighter volume. But we did get this reversal day here where we pushed through that low and got back up, and now we're actually flirting with the highs of this levels. We're not quite above filling the gap perfectly, but from an earnings perspective, most of the earnings that we have seen reported out were not exactly spectacular. So myself personally, I was leaning towards the short side a little bit more before a lot of this stuff started to unfold with the hurricane and everything. So I think we're kind of on a little bit of a wait and see, but if we're just paying attention to the charts, that gap filled, it's now the 4th day that we haven't filled the gap, and just from a standard technical analysis perspective, if you don't fill it within 3 days, it usually continues in that direction. But that remains to be seen. There's so many more things. One thing that everybody has to be aware of is that when you have significant news, especially as a technical analyst, the more significant the news will always trump the charts. So if you have something significant going on, you're not going to be leaning on the same support and resistance level. So my game plan for today is I'm going to have some stocks that we're going to cover here that I'm going to be looking at long and short. However, I'm going to be a little bit more eager to let the market settle in a little bit this morning to establish some intraday reference points that we could lean on to trade off of, and then take into consideration some longer term stuff, just because there's so much that has happened. So from a market perspective, you can see here what we have with the spiders. We'll jump over to the Qs. Qs broke down a little bit earlier than the spiders, and you can see that a lot of the key moving averages here are in the correct order, where the 8's below the 21, 21's below the 50. And you can see that the weekly and the monthly have both broken down pretty cleanly. And obviously, we had so many tech stocks report earnings that were not good. It shouldn't be a shock to anybody. And getting back to the diamonds or the Dow, which let's just pull up the industrials. All right, so basically, we did not get below that 13,000 level. We came close to it. We had a couple of really decent pushes to the downside. But again, we've had 3 days of consolidation. Now, just from a technical perspective, push down and pause on light volume should see follow through. Now, this is one of the trickiest spots that all traders will go through is, are we moving from an uptrend to a downtrend? By that very definition, it means that it's a potential change of trend. A potential change of trend, by very definition, means that there is no trend right now. So just the last few days, stocks that we had here that were clearly buys just 5 days ago by holding above some of the key moving averages, 3 days will not normally reverse a 4-month trend, which which kind of is what we showed you here in the top ETF. So what most traders have been doing, and Scott keeps tweeting about this, Mark keeps talking about it, Evan keeps talking about it, I keep talking about the same thing, is we're in a little bit more tactical mode right now, which essentially means that we're not necessarily eager to build positions right now because the bigger picture is not as clear. So essentially what I'm telling you now is your trade management should be known to you and mapped out prior to putting on any trades. So you work your way down from the market being obvious, if it is, which right now it's not, the sector that you're trading or the industry in an individual stock right down to the stock. The more of those pieces you have in place, the little bit longer you can hold your ideas. So we don't have that right now. So myself personally, I've been finding in this tape that's a little bit less obvious than it has been. I've been a little bit more eager to be booking profits on the shorter 1 to 3 day window. So that being said, we'll go into a one or two stocks here that are in the news. Disney obviously has the news last night about buying out Lucasfilms. They're talking about coming out with Star Wars 7. They feel that there is a huge demand for more Star Wars movies, and I'm a sci-fi fan, so I can't really argue with that. However, the $4 billion price tag, I guess everybody's still letting that digest to see what they believe, whether that's the right price or not. Netflix, everybody talking about Netflix this morning. Look, this is from a shorter term perspective. It's all over the place. I mean, what else can you say? The stock evaporates for about a month and then explodes and then evaporates and then explodes again. If you're trading the stock on a little bit longer time frame than just strictly intraday, I think it's a little bit easier to trade. The liquidity is just not as consistent intraday. Now I know on the last trading day that we had basically a $9 rally, $9.50 rally off the lows, and you could kind of see where that was coming from. If you look over on the weekly and monthly charts, we are positive from the open on both of those. So we do have some shorter time frame, meaning this month there's buying in the stock. However, if we go to the intraday charts here, we will take a look to see exactly where it's trading now. You can see it's actually trading now. There's some talk about Microsoft will not be buying them out, et cetera, et cetera, et cetera. So this is kind of what I mean about this stock. It's in the news a lot. So you really have to pick the right time frame to be trading the stock. It's actually down in this area here where it's filled a decent amount of it. Now, just using Fibonacci levels to keep it simple, if we go from 58 to 70, you have roughly $12 there. More often than not, people will look at a 50% retracement level as a level to start to dig in. So $12, half of that is 6. So 70 minus 6, right around 64 would be the level where you might start to look to bid there. And again, keep in mind, this is the 1, 2, 3, fourth time we've got to $70 in the stock. If you include this one, fifth time, and it has not been able to stay above there. So if you look to bid this 64, I would look for 70 to be the profit target. Scale out up into that level until you get some push through there. Another interesting stock that looks like it might have turned around a little bit here this morning, one that I trade on a regular basis, is GG. It's trading up in this level here at 45. Now the interesting thing is 47 is the target. It's already come from 41 to where we are right now, pre-market 45.16. So we're this is exactly the same on the opposite side of what I just talked about, where to look for a spot to bid into Netflix. This 47 to 41 is $6, half of that is 3, so 41. We've already gone further than the 50% retracement. So what I'd be looking for in GG here is not to be buying this higher opening. As a matter of fact, letting it pull back around this 42. But you got to keep an eye on something that has had a monster reversal after breaking down what many people would say this really clean descending wedge here on the charts. You could see it here if I draw it real quick for you. That should have gotten some nice push through to the downside, and actually it did for one day. But the fact that we bounced and spun around as hard as we did, got to be careful on that one. I do like it, but I don't like it on the open, buying the higher opening. If we go to everybody's favorite in the community here, this Apple. Obviously, Apple had earnings last week, and we pushed down. Actually traded a little bit lower than this 590 post-market when the earnings came out. You have to like the fact that it pushed off the lows and had what could have been a catastrophic day. Now they got a little bit more news with some people leaving the company. The circumstances around leaving the company, whether it's around Google Maps or not, it doesn't really make a difference. 2 key people from the company left. So again, something I talk about all the time when I am in the private room, in the active trader room. You must know whether or not you are a technical trader or you trade based on some other catalyst. Now, if you are a news trader, if you are a momentum type trader, momentum traders will do one of two things. You are looking for a catalyst that will give you fast action to take opportunities, and you must make fast decisions. Now, whether or not you're trading that on the open or whether or not you're trading that after some technical pattern sets up is two completely different trades. So if you're flat out news trader and you're getting involved on the action as soon as the news comes out, make sure you know that you're making quicker decisions. If you're not a news trader and you get all your ideas from the charts, you should not be getting involved immediately on the open or whenever the news comes out right away. You should let some technical levels settle in there and then look to get involved. So as far as this one is concerned, Apple, I am not I'm not a news trader myself, but I will say this. Earnings weren't exactly spectacular. We have rolled over on the monthly, we've rolled over on the weekly, and moving averages are all in key directions, and we just had some big people leave the company. Yes, we bounced off the lows. I still like this stock on the short side just based on this right now. Now, I know a lot of people in the community love the stock, own the stock, have had the stock for a long time. All I can tell you is pay attention to the charts, okay? You can't fight what is happening in the charts. So we have these levels right now, 590 to 610. We're trading right now 598, so we're kind of smack in the middle of that window right now. The charts are telling me that the stock is starting to roll over. If that changes, we'll see. You want to see intraday continuation patterns. So what that basically means is start to look on the hourly, 15, and even the 5-minute charts to determine if you get a push higher and pauses in the direction of the long side if you're a buyer of the stock. If not, you start to see the opposite. Don't get blindsided. Pay attention to what is happening as opposed to what you would like to see happen. All right, guys, I'm not going to make this into a really long call because I want to try and get something out to you this morning at a reasonable hour. I promise tomorrow will be a little bit more detailed, but I'm trying to work this from home as well. So I will see everybody in the virtual trading floor, and we will have a recap at the end of the day as I get a little more comfortable with working from home today. I'll try and make it a little more detailed tomorrow. Have a great day, everybody, and we'll see you later.